the pound into the bracket again. Half back, pull back on the pound. Time of the day, crossing over into the US session. Yields getting murdered. Sterling still at a significant premium. Opens the door to a big sell-off on sterling. When you look at the shape of the sterling premium, it's massive. So you can start to recognize the opportunity to go short into sterling from that earlier high for the extended leg lower. From the extended leg lower, we've just went from a high price of 38.70s now to a low price of 38.5s. 65 additional pips, which is huge, right? Absolutely huge in terms of structure, in terms of the way it's composed. And you can see that when we take this into a directional bracket and you start thinking about where the possible trade outcomes could be, you can start to develop out some ideas and some thoughts against the bracket itself. You can see what I'm talking about the halfback trade. There was a halfback trade right there. And you can see that the overall shape of this is going great guns for a possible target price. Now, we're obviously 30 minutes to the fix, so it's got a fair distance to still go for the fix, but you can see where it's going to for the fix itself. Very, very big opportunity. And that's exactly what we're kind of trying to get to at this point, is that huge opportunity to make some easy cash, guys. Some easy cash on that. Crazy. Pretty crazy, if you ask me. Sell side Nasdaq S&P still working great for us, guys. There it is. Short Nasdaq S&P. Brilliant trade, right? It's worked out really well. It doesn't matter what the S&P's done. We've still made money. That's the whole point of spreads, isn't it? When you think about it. The ability to keep making money regardless of whether this goes down or up as an index, as an equity index, that's the value in spreads, is the ability to understand what causes things to move. And if we can understand what causes things to move, we can start snapping away some of that trade, some of that value, can't we? It's a crazy, crazy process that we get into, guys, once you start playing this thing. So I could even do a little quick spread here to see if I can make a quick buck on this. So what I'm going to do is I am going to buy a quick NASDAQ trade. I'm going to sell a quick S&P trade, and I'm going to put a quick short bond into place as a hedge trade against that and see what that one lot hedge trade does over the short period of time that we've got left. And I'm going to try and work a bit of a position around this at the moment. So I'm going to try build a little bit of a position around this. If the value improves, then I'll try and work a little position into this so you can see what happens to this bit of business here. The idea is for the market to move a lot and for me to not make any money or lose any money. It might sound as if that's a really stupid thing to try and achieve, but when you think about it, the ability to get into a certain position in size and not lose any money is actually quite a thing to do, isn't it? It's quite a thing to try and achieve. Yeah, it's looking good. It's looking very good at the moment. I like it, the way it's going. We'll try and take it up to maybe about 5 contracts total. And I want to see if I can get as wide a spread as I possibly can on this 5 contracts, and I'll take a screenshot and I'll bring it across so you can see exactly what it is we're trying to accomplish with this little trade, and indeed to see if it can move quite a bit of distance and not loses any money. Okay, I'll take a quick screenshot there. So here's a quick screenshot to show you how this trade has evolved that I started just there. And I want to just show you, because obviously I've just been working the prices. You can see here we got 5 short S&P, 4 long NASDAQ, just taking a bit of volatility in favor of the S&P. 5 short S&P, 4 long NASDAQ, and 4 short bonds. And you can see that the 4 short bonds were up $1,190 minus $750. We've just made a double alpha profit, haven't we? That's pretty impressive. We've made a little double alpha profit on just 5 contracts, on a 5 contract spread. And the idea is to obviously work into that spread until the spread flips over, and then see just how much more we can make out of this bit of positioning. From that overall view, it's pretty good, isn't it? It's pretty good. So obviously, if I can get the equity spread into profit on an alpha, a double alpha profit, then it's not far off it just now. If I can get that equity spread into a double alpha profit, I could actually just turn my bond into an outright short trade with a stop at break even. And if bonds collapse, I could make a fortune on those four short bond positions. That's what I'm just watching for just now. I've got, I'm down about $150 on the equities. I'm up $500 on bonds, so I'm about $350 net profit on this at the moment. $350 net profit. I'm very close to a break even now, double alpha on the, very close to a double alpha profit on the equities. And I'm still $375 up on bonds. You just flip this into an outright bond position with no risk. That's what I'm going to try and do at this stage, guys. I'm $500 up on bonds. I am down $250 on the equity position spread. What I'll do is I'm going to take another little bit of bond positioning against this at the moment. See if that helps out the position a little bit. There we go. There we go. Well, there we go. There we go. So this is how it's developing here at the moment. What I'm trying to do is I'm trying to trade this difference between the black and the blue here. That's what I'm trying to do just now, and that's what's making us a small but reasonable profit just now, is we're trading the difference between these, with the intention, of course, that if they flip over, I'll be able to make a very, very nice profit on the flip. If they flip over, I'll be able to make a nice profit. You can see the black line's coming down, the blue line's going up. This is looking good. I've got a double alpha profit. No, not a double alpha profit. I've got a double alpha profit on the big picture position, but not on the equities. Obviously, I'm profitable on the Nasdaq and I'm losing money on the S&P. My net position is just slightly in profit. My bonds are at scratch. So I don't think we're far off making a double alpha on this, guys. I don't think we're far off on making a very, very big, nice little profit on this. There she goes. There she goes. There she goes. So our S&P Nasdaq position started to work out pretty good there. So this is where we're at with that position there. You can see that the Nasdaq has actually now gone into net profit. The S&P position is now losing, but the net position is now in profit. The net position is now in profit by a fair amount of money, right? And we've now got the final position, which is exactly what I was trading. I'll just hopefully take a quick screenshot so I can capture it for you. So you can see what's happened now to that position. And I'll take a quick screenshot on the bond. Remember, I added a little bit of bond to this position as well to try and improve on the bond narrative. And you'll see what happened to the bond position. We got the bond into profit at $375. There it is. There's the bond position. We've made $700 here. And you can see that that overall position is just on a $1,000 profit, guys. $1,000 profit for the closing trade on that one. And that is how we make money every day, guys. This story, see this story here? That's how we make money every day. We don't have any directional risk. I said I was selling the black line and buying the blue line. That's what I did. So I sold the black line just there. And we were buying the blue line just here. That's what the trade was. We've just shown you. So we bought the blue line here. We sold the black line. You can see what happened. The black line fell down. The blue line went up and we made a profit on that trade. No directional risk. So look at what happened to equities. Equities went down a little bit, went up a little bit, spiked higher, spiked lower, did a lot of things in there. It doesn't make any difference to us. We don't care. We made our $1,000 on a small position. And the algorithms do this 20, 30, 40, 50 times a day, guys. 20, 30, 40, 50 times a day, doing these little trades, putting in some big size only. The difference in the algorithm is it's doing several hundred contracts on each. Not just a 2-lot or a 3-lot or a 5-lot or a 10-lot, it's doing several hundreds. But it's doing it 50 times a day, possibly more. 50 times a session, more like, probably more realistic. And, you know, making these little profits on those types of trades is worth, you know, hundreds of thousands of dollars every day. That's how the bank makes its money. That's how the quants make their name, by developing out these little processes, by developing out these little trades. You can see just how well this trade's evolved. You've seen it from the inception, from the scratch. I've taken screenshots as it went through that process, and you can see the outcome was absolutely glorious. Absolutely spot on. So we don't care where the profit comes from. We don't care whether it makes a profit on the S&P or the Nasdaq. It doesn't make any difference to us because it's the net position that makes a big difference for us. It's not the answer a lot of retail traders want to hear, because they want to hear that we trade the same way as you do. But unfortunately, we've told you many times before that that's not always the case. There's many different styles in institutional trading. And, you know, trading this style is the way that index arbitrage traders trade. It's as simple as that. That's the way we trade. That's how we do business. You should be currently long the S&P. The value did break through that bottom edge at 433s on the SPX, but the change in the value developed at the price of 43.28, and you got a very nice, reasonable 5 points off the low price on the bounce there, guys, if you took it. So the first buy did well, it bounced nicely, but the value collapsed behind you, and you've got to just say, okay, well, fair enough. And then when the value starts to improve again, second time, you start buying back in again, and you've seen a very reasonable buy-side profit again for a second time in the outright S&P position. And you've had a very, very nice trade outcome coming away from that low price. It's good. It's very good. Not a lot else is happening, to be honest, guys. Not a lot else is diddling along in the background.